Alright, just a quick video here, just showing an update, a shorter update on what I look at every day with the different tickers. This is Apple here. It's just highlighting some of the different signals that mix between the data that we produce and the liquidity sentiment, and how you can see that they're working really well. So here we can see this very strong patch of buy signal coming in at about the same time that we've got quite high DPI over a period of time, and no real strong associated price movement. You can see here this DPI is moving up gradually, and so is the price, and so is the gamma. Where here we get this little bit of convexity here, which you might have heard me talk about in DPI, which is a real signal that gamma's dropping, but we've still got buying happening. And if we quickly went and had a look at that using the liquidity sentiment indicator, you can see here we've got this is the same time period here between the end of September and the start of October, and we have this very strong liquidity happening, illiquidity happening here, very tight liquidity happening there. Before we've had a little bit of a tightening in the IV and loosening in the liquidity before it's just pretty well tightened up again. As we can see, we've got price discovery happening there to the upside. This is a lovely joining of these two little bits of data here. So again, I'm having a look at that middle of September through to start of October, and again, if we just check that on top corner here is the dates. We can see here at the middle of September we would start getting this strong DPI. We've got a really big volume spike happening, high DPI. Even though we've had the price appreciation, we get a convexity here in the bottom of our gamma compared to our DPI, which you might have seen in the DPI video, and we've got these strong buy signals happening. If we just quickly had a look at what we can actually see in the data, this is interesting because you can see the difference between the couple of markets that we've got there. We've got a market here which is quite flat going into September, and if I go and have a look back, we've got this flat period of August going into September. We've got quite a flat market going in, and then we've had this accumulation here, this new buying here of the underlying to hedge the new calls in the position, and then we can see it going through here into a long market, and it's really fired up in about the 18th of November, the 12th to the 18th of November. If we look at that in a bigger market, in a 30 NDM, again we can see that we've come through in this flatter market. We've gone more into a sideways market that's starting to lift, and we can sort of, we cut out a little bit of this colouring here. If we go through to the middle of September, we'll get a bit of differentiation of colouring, and then you can see that we've gone from, we've had quite a strong bit of a market there in October, and then it's really backed off in the centre of October, and we've got quite a flat market going through again to a strong long market. And then we've had this delta hedging. We've had a little bit of a pullback in it, but really this is just delta hedging. It's very low. It stands out because of it's stronger than other positioning was in those delta columns. But really, if we were looking at the put call ratio, this is nothing, and there's very little. There's a couple of tiny bits of discretionary hedging here. Here's one from the 18th when we saw a little bit of a pullback. We saw this pullback here in the 18th, and then we've seen another buy signal. If we go back and we had a look around the election and around the earnings, these are the traders that I look for. There's a little group of them that are sticking out here with quite heavy hedging. You might see they're very small. They're a very small detail, but they do stand out because of where they are, and those are the sort of dirty footprints that we look for. They're a particular sort of trader, and it's very interesting. If we look at these dates here, we're looking from about the 28th of October through to about the 11th of November, and if we go and have a look at that in the price action, we can see this Actually, it might be easier if I just have a quick look on the. If we go and have a look at that period on the trading view chart, we can see liquidity is loosening here, becoming becoming more liquid, and we can see that here about the 28th, 29th going into earnings, the brakes have really been put on, and there's some insurance has been taken out by these savvy investors or swing traders. And here we can see it's gone right through, and they haven't bought the first dip. They've just kept themselves hedged, and they haven't taken that hedge off here till the 12th. Before we've seen this explosion, and here we go from about the 19th. We see the liquidity dropping and getting tighter. And even though it's raised here, if we look at how raised it is compared to previous in a similar environment, it's still very low liquidity compared to other periods. And then if I just quickly switch back for you, so I don't talk everyone to death, if I switch back here, I've gone to the wrong one. If we switch back here, we can just see again that was this hedging sitting out here that went through here till about the 11th. Before we've had people just jumping on, and we've had this really strong trade going through in Apple. Starting here at about the 15th, they've really started to pick it up, and by the 22nd it's going hard. And we start to see this delta hedging coming in with the odd time that someone's put on some discretionary hedging, but we've never seen 2 days of it in a row, and we also haven't seen any reduction in the short-dated calls, which is a real sign that that there's something happening when the short-dated traders aren't long anymore. Here, this bit that's disappeared, the OI that's disappeared, the open interest that's disappeared here, this is just the hedging that's come off. And if I take off the delta screen on this, you can see that it's come off both in the puts and the calls. So it's about the same amount of gamma has come off. It's just the delta hedging that's been on for that period. And again, you can just see the difference between, it's pretty flat markets going through to all of a sudden we see high delta in the money positionings being held. So that's just a quick explanation of some of the things that I'm looking for when I'm deciding whether a market's long, when I'm looking for buy signals that are sort of hidden in the price action, and it's always much easier in retrospect than when you're at the coalface trying to work out what's happening at the coalface. But we've got some sensible things that we can, if we want to see how this positioning looks after a little while, we can just push it out and have a look at how it sits. And it might be looking quite heavy until we put a delta hedge on it. A delta filter on it, and you can see that it disappears quite quickly. And there's actually very little hedging left in there at 0.6, which is I think is always a good place to see how that hedging's going. And if we look at it and we've spread it out a little bit further, even though it's just duplicating it, we can see it's really quite light, even if we're looking at it over a period of time. And we can see these heavy in the money calls are still there. There's no in the money hedging that we can really see of any substance. This is all delta hedging here. It's just nothing more than market makers having to hold a position against it. Anyway, I hope you've had a great Christmas and you've enjoyed this short video. I will speak to you all or see you all before New Year's. Thank you.